morning, everybody, for this Thursday, May 9th. Market just opened up about 15 minutes ago, and as you can see right here on a daily E-Mini chart here, the daily E-Mini, the market has actually made a higher high again. So the fifth day in a row, well actually sixth day in a row, right? Friday, or let's see, what day was this? Thursday, Friday, Monday, Tuesday, Wednesday, Friday. Look at today. The market's made a higher high. The E-Minis have hit 1630. Yesterday's high was 1629.5. So far we've only taken out yesterday's high by 50 cents. But if you remember yesterday's rant, I went on a rampage about how strong the market was, and for all those that, you know, I agree the market is overextended. But how far can this market run? I don't know. Nobody knows. All we can do is follow what price is telling us, and the market's moving higher. So yesterday was actually a big up day, actually a really big up day. Opened up near the low and rallied pretty much all day long, closing near the high of the day. And so the market's strong. So let's just review the stocks that I've been looking at here, the stocks that I've been telling you to get long. And again, the first one is Baidu, B-I-D-U. Again, this market needs to, you know, bounce. I mean, the market's was testing these lows, dinking around in here. The energy's starting to contract, right? We're starting to get the market starting to contract down in here, and the market busted up just as expected, right? Baidu. Another one was the pharmaceutical company Onyx, O-N-X-X. I mean, look at the bounce that we've got from the 50 exponential moving average. I mean, these are trades that you need to be looking out for. Right? As you can see, all these bars are green, which denotes that the trend is up based on everything that I teach inside my E-Mini Success Formula, the Power Stock Trading Strategies program, and even the Forex for Profits and E-Mini Success Formula. The trend is up. Clearly it's up, and when the market pulls back for that first time to that 50 exponential, the hot pink line, that is a buying opportunity, and the market has bounced nicely off that level. And the one market that I threw in the mix yesterday was Netflix, NFLX. Again, I'm patiently waiting for this market to drop between the mid to the lower Kiltner band, which will also correspond with that 38.2% retracement from the low made on April 8th to this high, right? And also that would be a support level from the breakout area, right? Resistance eventually becomes support when broken to the upside. So I'm looking for the market to drop down into this area here. And then I also mentioned, you know, you could be trading the SSO, which mirrors the S&P 500 pretty much, right? It's an ETF that's 2 times the general market. So what I want to do is, for those of you that do in fact have time during the day to do some day trading, let me just show you a few real basic setups that really work nicely and what I look for when I'm sitting day trading. So you could, you know, if you put on a futures chart, it would look just like the SSO, right? The SSO. This is a 3-minute chart. One of the things that I look for is I look for that first half hour to develop, right? The first half hour helps give me some type of bias to the rest of the trading day, okay? So what I do is I sit on the sidelines for 10 3-minute bars, which is 30 minutes. So look at yesterday. Okay, you wait for the first 30 minutes to develop, and we got that here, as you can see. Okay, this is the 10 o'clock bar, which actually happened to be the high of the day. I mean, the high of the first half hour. So we're looking for the high of the first half hour and the low of the first half hour. In whichever way the market breaks to, either up through the high or down through the low, in this case, yesterday's case, it broke through the high. Once it broke through that 10 o'clock high, it's 78.71 on the SSO. I was a buyer. As you can see, the market penetrated through right in here, right? Pull back a little bit. You can either buy automatically as it breaks through that high, or you can wait for a little pullback, a 2 or 3 bar pullback like you got here, and you'd be looking to go long. As you can see, the market ran up nicely, so that gave me the bias. Actually gave me the bias pretty much for the rest of the day. Okay, but let's just say you're flat right in here, and as the market rallies up through the daily R1 number of 78.86, right, pierces through it here, that becomes support, right? Resistance becomes support. So look at when the market came back and kissed that daily R1 number. Okay, that's a great buying another buying opportunity. As you can see, the market rallied higher. Okay? Then the market hit this high in and around R2. The first time the market pulled back to the hot pink line, which is the 50 exponential moving average, you're definitely looking to buy the market long. Now, if you don't feel comfortable buying it automatically as it hits that line, the 50 exponential, wait for a price pattern. And you've seen me talk about this price pattern that I'm going to mention in a minute all the time, and that's the inside vertical bar, right? That's where the high is lower than the prior bar's high, right? And the low is higher than the prior bar's low. See that tight little inside vertical bar where the energy is starting to contract? So you're looking to buy the market as it penetrates up through the high of that inside bar. And as you can see, the very next bar took it out. Would that confirm the up move? And really all you're looking for on a trade like this is for the market to come back up and try to retest the prior high that it rallied down, that the market retraced down off of. So right in here, this is the high. See that? So buying it right in here, you're looking for the market to retest that high, and it certainly did. Right? And you can also see that all these bars are green. So the trend is up based on really everything that I do anyways. Now, this is interesting. I want to really point this out and then I'll let you go, okay? As the market dropped down, okay, as you can see in here, market eventually dropped down. Now, this purple line is the 200 exponential moving average, another great moving average to use. Now, why do I use the 50 and the 200? I mean, pretty simple. Everybody uses it, right? All the institutional traders use it. It's like a self-fulfilling prophecy. So when the market gets in and around these areas, you're looking to be trading around these areas. So let's take a look at now. Now, granted, the bars turn from green to red, right? Official downtrend here. But you have to look at that and say, where are we in relation to the day's trend? So if we take our fib, I use TradeStation, click here, take it from the low of the day and drag it to the high of the day up until that point right there. If you take a look at what I just did, look at where the market came to. The 50% Fibonacci retracement from the day's lowest low to the highest high. Look at that, right down in here, this white horizontal line. 50% retracement back to the 200 exponential moving average at a time of day. Look at this. This was at, let's see, 2:48 in the afternoon. The market's trading down off the high of the day at a 50% retracement of the day, which is a normal retracement. You're looking to buy this market, if anything, okay? And another pattern that I like is what I call a double 3-minute bar low, with a higher high and a higher close on the second bar. So look at these lows. 78.66, 78.66 on the second bar. The second bar's high is higher than the first bar's high, and it closes in the top quarter. Right? So if you didn't feel comfortable buying it automatically down in here, once you saw this pattern, you're buying it at the close of this bar, roughly 78.79. And look at the remainder of the day, how it rallied. You see that? So a good little lesson on how you can, take what I have just shown you, put this on your screen, start watching it, and see if it helps you in terms of getting your direction right and helping to pinpoint your entries and exits. So as you can see, the market has opened up today. So the market's only been open for 25 minutes. So again, we're still waiting for that bias, right? So we're waiting for that first half hour to be put in place. And then after 10, you're looking for the market to either break up through the highs or down through the lows. And that is typically going to give you the bias. Now, of the entire day, not necessarily, but for the next immediate move, it surely will. So look at this market's trying to challenge those highs. We're actually trading above yesterday's highs right now, which is right here. Oops, let's take this off. This is yesterday's high right there. Right? In the SSO, 79.29. Okay, we're trading above that level right now. So it'll be very interesting to see if the market actually breaks up through the high of the first half hour or down through the low of the first half hour. If the market takes out the low of this first half hour, then I would be looking to sell immediately on that first pullback, looking for some down move. Okay, now is it going to be down for the rest of the day if it takes out the low? Not necessarily. If it takes out the high of the first half hour, is it going to move up the remainder of the day? Not necessarily. All I'm saying is whichever way the market breaks through in that first half hour's range, either up through the high or down through the low, it gives you the next move in the market typically, okay? And you can usually profit from that. So we're going to miss Doc today. He's on the road with his son driving to California. So we're going to miss him today. Have a profitable day and hope this video helped. Bye for now.